What's going on, everyone? Zachary Jensen, managing partner of TaxWise Financial Services here, where we're empowering our clients with tax savings to grow and build their wealth with confidence. Today, we're going to go over a very, very tax efficient retirement strategy that will end up getting you about anywhere from 10 to call it $20 million in retirement in a very modest way. And this is for business owners using the solo 401k, more specifically, an optimal way to do it, because we know that picking a salary can be confusing and how much do I contribute to this thing. So we're going to go over how much to put, what is the solo 401k, how to practically do it, how it works with payroll, and so on. So first of all, for self-employed individuals, establishing a retirement plan is crucial. Your employer doesn't do it because you're the employer, so you got to do it. So the solo 401k, also known as the individual 401k, offers a very powerful solution, especially when both spouses are involved in the business, even when they aren't. We can get into that later. This retirement plan allows for substantial tax-deferred savings, combined employee and employer contributions. By strategically allocating salaries and contributions, self-employed couples can significantly enhance their retirement savings and optimize their tax benefits. So a solo 401k is a retirement savings plan designed for self-employed individuals and for business owners with no full-time employees, with the exception of possibly the spouse, because you have to offer it to all of your employees. There is a workaround on this. Reach out to us if you're interested in that workaround. Our contact information is in the description below, but that's a topic for a separate video. It allows for both employee deferrals and employer profit-sharing contributions, which enables higher annual contributions compared to other retirement plans. So for 2025, the total contribution limit actually is $70,000 or $77,500 for individuals 50 or older, and that's just for one person. So the strategic salary allocation part is the big part, because you need to, if you want to hit that maximum, contribute a lot of salary. And when you do a lot of salary, that's a lot of W-2 taxes you're paying. And a lot of W-2 taxes you're paying, those are taxes you're paying on your W-2 Social Security and Medicare that you wouldn't otherwise pay if you took it as a distribution if your company's an S-Corp. So how much salary should you take? In general, paying yourself around a $40,000 a year salary per employee, so for you and your spouse, is a good starting point, right? I'm not going to say this is what you should do, but that's a good starting point, because each of you can defer up to $23,500 or up to 100% of your compensation, whichever is less, into a solo 401k as employee contributions. And then your employer contributions can be up to 25% of the salary that you take, or $10,000 per person in this case. So this setup results in a total annual contribution of $33,500 per person, or $67,000 combined, which, if you do in a compound interest calculator over 40 years, is anywhere between $13 and $20 million. So very, very powerful stuff, depending on the rate of return. That $13 million is towards the lower end at 7% annualized. There's a ton of benefit here, right? You get that tax deferred growth, right? The contributes to the solo 401k are made pre-tax, reducing your taxable income for the year. You have lower taxable income, right? That $23,500 that you defer leaves you just $16,500 to pay taxes on. So you'll make roughly $1,000 a month, call it give or take, from this W-2, and the rest of this money you can actually take out from your distributions themselves. And then the employer deductions themselves, the business can deduct that $10,000 employer contribution per person as a business expense, further reducing the taxable income. So let's go through some math here, because that's always fun. If we have a gross salary of $40,000, after the $23,500 employee deferral, you get a taxable income of $16,500. Assuming a 12% federal tax rate and accounting for Social Security and Medicare, your taxes will roughly be $1,980 and $3,000-ish, with a total take-home pay around $11,400. Now, with the long-term wealth accumulation, which is the exciting part, consistently applying the strategy over, let's say, a 30-year period can lead to substantial retirement savings, assuming that 7% growth. The solo 401k could be $33,500 per year. Total contributions over 30 years is $1 million roughly. And then the estimated account value per person is roughly $3.2 million. And the combined value there is $6.4 million. So that's pretty good. And if you do 40 years, it's well over that $10 million that I told you earlier, in between 10 and 20 million, depending on how the rate of return you're using. So by strategically allocating the salary and maximizing contributions to sell a 401k, you can kind of squeeze the most benefits around that $40,000 a year mark. and then you can worry about using the rest of the money for other investments and that sort of thing. But most people are cool with, hey, $10 million when I retire, that'd be pretty sweet. So that's the number that we usually start with. Now, everybody's different. If you need a more personalized plan or have any questions about what we just talked about, our contact information is in the description below, and you can reach out to us and we'll be able to help you out. So thanks so much for watching and have a great day.